Good morning, traders. Today is the 26th, Friday, July. What the heck am I thinking? Um, Welcome to Friday. We made it. Markets, this is the SPY. This is the Plan Your Trade video for Friday, the 26th of July. This is Brad Matheny, and welcome again. So today we're looking at the SPY, and the SPY is up to 542.82, up into this area, off of these lows. This kind of a double low formation here. We are really looking for the SPY to make a move back above these levels here. So highlighted these the other day off of these lows from back here. This is really our A success and B failure rate. We are deeply below this lower channel and deeply below this dotted yellow channel. We do need to see a fairly strong recovery at this level. Otherwise, we're moving into deeper downward territory. Now, I put together a video yesterday discussing what I think is taking place. And I got a message from one of my friends and subscribers about the non inverted yield curve that set up over the last couple of days. And I believe this is all still related to Kamala Harris's nomination. It seems oddly similar that we have a change in U.S. politics, drastically changing the outcome potentially of the election from let's call it more stable price action to extreme uncertainty, and we get this big gap down literally the day after she becomes the nominee, and we are continuing to move downwards. So I believe that this is all going to flush out. I believe that the Fed has the capacity to continue to manage risk factors, and we're going to see how it plays out. But right now, like I told you guys yesterday, I'm not seeing too much to be overly concerned about yet. This is a daily chart. I'm going to go back over here and show you that, we could come all the way back down into these 525 area if this selling persists, eventually maybe down into this 500 area. But like I said, I am right now under the firm belief that we are looking at a pullback, and it would be a moderate pullback given my trending. You can see here I've marked A back here in July of 23 to B, the October lows in 23 to an A, B, and what I'm thinking is a C move here, and C could consist of an A, B, C move here. So understand that this would be a very healthy pullback in an uptrend, which could continue. And I believe we're really going up to the 606 area to 735 area up here. And I do believe that it's just a matter of time at this point before we start hitting this 735 area, which is going to be way up here. But as you can see, I'm looking for another leg higher. I'm looking at this to be a moderate pullback and into another leg higher, moving into the election, at least into September, potentially October 2024. So at this point, I think we're just in a C move pullback. So you can see here, this is a C, and we got 1, 2, moving up to 3. This could be a complex pattern with an A, B, C type of move here, going up to this extended wave, possibly getting a deeper pullback here, and then extending upwards. So let's go over the new pressure system. So we're going to open up here at 542.80 or abouts. We're still going to be theoretically below this area. These will change right after the market open. This 2-minute, 5-minute, 10-minute will likely be plotting new triggers. You can see we're almost above right here, almost above this lower, what's called ultimate level, which means we'll go bullish. We're still below the lower ultimate level here, which means we'll stay bearish. We're close to the lower range and the ultimate level, depends on how the market will open here. Likely stay bearish on the 5-minute. and likely stay bearish here on the 2-minute, although the new opening price here will set up a low price level here, here, and here, setting up a potential for a revised ultimate level. So we'll see where we're at now with this level. So our ultimate level here is 544.80. So we'll come in here and go 544.80, and the background will be red, and font size is 24. So that gives you an idea where the actual persistent support and resistance is, pretty much right in this 543.80 to 544.80 range. And that's going to give us a pretty solid intermediate roll price. Now we're right below that level right now. So if we get above that 544.80 level, we're going to be back in bullish trending. And like I said, right at the open, things will change. I'll try to give you guys an update at that time. But like I said, we're looking at a base bottom setup. So now let's come back over here to the SPY chart, go back to 30-minute, of course, recycle the range. And where we're at with this SPY cycle pattern is we're in this top resistance pattern, which is counter trending. A top resistance pattern that is counter trending is essentially a temporary bottom. It is a bottom support signal setting up. Counter trending means that we kind of invert this pattern. So again, yesterday I drew this level, and depending on where we open and what happens, if we hypothetically open in this area, 544 and change, hypothetically, we will be looking at a bottom reversal pattern. Now, a bottom reversal pattern is, let me get rid of some of these, can come in two forms. Okay, a bottom reversal pattern can move, see that we come down and establish a new low and then roll higher. But because we've already established these deep lows on the close, we could essentially have this be the bottom and roll into some sort of moderate upward movement, maybe not that big, but ideally some moderate upward movement that maybe attempts to move above previous support and resistance levels. Now, I'd like to see it get above this dash line and get above this dotted line to actually move back into this success area here, which is above, let's call it 548.75. Right now, we're in this technical failure mode. This means that we are overall generally bearish, and we need to get back above this level, 548. Let's call it even, 548 even, to get back up into the bullish success ratio. Then we're going to try to move above these two support and resistance levels. You can see them. Basically, one is right here. The other one is this one I'm just highlighting. We need to get back above this 551 level to move back into general bullish trending. And that's going to be a pretty big rally phase. So understand that we've got a ways to go still to move back up into that phase. And if we were to make that move off of where the current price is, that would be a 1.5% to maybe 1.75% upward price move from where we're at right now. That is not, that's a big number, but it's not an undoable number. Okay, it really is not. So again, where we're at right now is we're looking for a bottom reversal pattern setting up. We have a little bit higher close here. I'd like to see this push up closer to this 543.5. We'll see what happens. Looking good. We're already up 0.85% from yesterday's close. So again, we're making the move. If we just move up another 1% from this level, we'll be back up here in this A success ratio. So again, we come over here. We look at, this is a 1-minute chart. This is part of the new code that I was working on. So we'll skip that real quick. Is this the, and then we'll take a look here at gold. Gold really setting up a decent base bottom here outside this lower range. Like I said, once fear subsides regarding the Kamala-Shakeout, I'm calling it. I think we're going to see gold move back up above 2470, 2480, probably move up into the 2450 area very quickly. So again, I think we're setting up a good base bottom rotation here. And then let's go to the QQQ. And we have the same type of scenario. And I think I was highlighting these regression channels. Yep, there we go. So regression channels are very handy to determine, essentially breadth of market. And the way I like to look at it is when you get into a regression channel that is narrow, so hypothetically you come from here to here, and you're going to see a very narrow regression channel. That is a 2 regression channel. And you see how tight and narrow that is? That means you're getting very solid trending. It's when you then take the same regression channel across here, for example, and it widens up. So this is almost double the width of this. This means you're getting a very volatile downward trend. So you can see here that we've had a very tight trend, very tight downward trend. It's not going to take much to break this channel in this downward cycle mode back to the upside. This is about 1/4 the width that we had back over here. This is a very aggressive downward trend. And again, I think that we're going to see a fairly solid here. You can see it's at 463.81. It's already up 1.25%. So we're going to be opening up into this area, and we need to move above this gap area here. And we would like to see it, I would like to see it move above this gap area here and eventually try to fill this gap area here. So you can see that we have these very large moves, potentially from where we're at here up into this area to try to find some support, possibly up into this area. And then eventually we got to get up into this area to try to find support. And then we're going to be off to the races again. So be aware that I think this is a very deep shakeout related to Kamala Harris entering the race and the unknowns that are playing out. Yes, it may affect global markets. Yes, it may affect U.S. expectations. Yes, it may affect the credit market because we just don't know what her policies are, what her plans are. But I think overall, the Fed is capable of handling this right now. And I think the concern for a major crisis crash is quite overblown at the moment. And I will change my tune when I see some more clear evidence. But again, be well within the 2% upward channel, sloping as we are at an almost 45-degree angle. I'm not too concerned right now with this move. Yeah, we've had moderate volume, nothing super heavy. It does look like we may have gotten a bottom, at least from this early morning activity. Again, not going to start selling the farm. Definitely suspect moving into a hedging position is fine. For example, moving into gold, if you haven't already. I've been a big advocate of that for the past 3-4 years. Hedging into gold is not a bad idea, guys. Gold or silver at this point. You can see gold has made a very solid move here, up 104% since basically 2018. This is a very, very solid move. And the next big move for gold is going to be 37.50. Well, 25.50, then 37.50. So we've got a lot of opportunity left to go. Okay, so where we're at with this is we need to watch this move. Like I said, from where we're at, we need to get basically on the SPY, we need to get up really about another 0.75 to 1% higher to get back into my A success ratio. And if we were to see a 2% move to the upside, we would be looking at trying to fill this gap window again. This would be very positive. I'm not saying it's going to happen, but saying a move back up above 550, 551 would be stupendous to continue this move higher. And really, if I can figure out where it was, I guess it is here. Go back to the weekly. Really, when it comes right down to it, folks, we are still in this 1, 2, 3 mode, I believe. This is just a pullback. You can see that it's, almost beautifully right in the bottom 1/3. In fact, I can take a look at this. It's probably very close to a 382 level. Well, it's 618. You can see the 618 level here, and that's the opposite of a 382 level over here. So the reality here, folks, is this is a beautiful pivot before we take off back to the upside based on Fibonacci price theory. And I suspect we're going to find some pretty solid support right around this 537, 538 area, and then rally back up to the 552, 551 area, trying to rally back out of this up into this 606 area first, 609 area, then eventually back up into this 637 and eventually 700 plus. So again, long term, I'm not too worried. Short term, we need to see some support for them. Otherwise, we could see deeper downward move. All right, guys, more later. Talk to you later.